I now present our first presenter. He is Dr. Taran Kamraj.
Thank you all for coming here this evening. I'd like to express a warm welcome to all of you listening from Guyana. So my presentation today will be on the Natural Resource Fund and Economic Management. Let's start off by talking about the Natural Resource Fund, which will be very important going forward for managing the economy, whether it's at a macro level or a micro level. So what's the Natural Resource Fund? It's an account, and all oil revenues flow into that account. It is invested and kept overseas. It should be noted it's not the only account or not the only government account that is held overseas. For example, the Bank of Guyana holds its international reserves, or foreign exchange reserves, as it's sometimes called, in dollar assets overseas. Okay, commercial banks in Guyana are required to have foreign deposits or foreign assets, and these are meant for facilitating international trade. The banks grease the wheels of trade. Okay, so on the next slide, we will. Let's talk briefly about how much money is in the account right now, which is held overseas, as I mentioned. As of the end of July this year, we have $845.61 million US dollars in the account. There must be parliamentary approval that for the 2022 budget period, Parliament approved $607.6 million US dollar to support the 2022 budget. For context, we should note that the 2022 budget amounts to 552.9 billion Guyana dollar, or conversion 2.66 billion US dollar, which takes us around 21% of the national budget is currently financed by oil revenues. So I ran several simulations to figure out how much money is likely to be in this account by the end of the decade, because there are lots of forecasts, and for those of you who are following on how much oil revenues there will be coming to the government, how much is going to go to Exxon and so on. I'm not going to get into that today, but that's also an important topic. And my calculations tell me that at certain oil prices, we should see $8.5 to $13.8 billion in the account by 2030. So it should be noted that this is based on these numbers, the 8.5 and 13.8. These are the numbers remaining after the government withdraws its annual funding for the budgets, right? And again, so I've done a few columns of this. How did I come up with these numbers? It's explained in this column, and I know it's going to be the next page. I have some tables, but for those of you who are online, I know these links are shared to you so that you can get these links from columns I've done for the Tablet News. But at a higher price scenario, and of course, making forecasts is never easy, but you have to take averages. And I am basically simulating very conservative production levels. So for example, by 2030, it's foreseeable that the capacity will be there to produce more than 1 million barrels, but not because the capacity is going to be there, meaning they will produce. But again, I hope you will ask questions on these issues, but you know, the world will change fundamentally in the coming decade as it relates to energy consumption and so on, the energy composition, particularly the Ukraine invasion, as many of you would have figured by now, will have, I think, will speed up the transition to renewables and alternative energies. So I am sticking with these numbers. So according to this scenario, we should see about 12.855 billion US dollar. I have another scenario, which is the next table, that tells us that we should have about 8.5 billion remaining in the account by 2030. Of course, I'm stopping at 2030. We can project this out further, but so those, again, if you want to see how these numbers came about, look at the link that's online, and I think these links will be on OGGN. So let's talk about the implications of all of this. So I've had, as I said, I've written several columns on these topics, and you can find all the columns there, and I urge you to read them. But we have to discuss now the implications of this spending. So far, we said 22% of the budget is financed by oil revenues, okay? It could potentially go up to 25, 30%, and this will have consequences for the economy and managing the economy, all right? So I know this box might be preventing you from seeing the question, but how do the oil monies enter the economy? That's the question, right? Well, there are two direct channels that this money should enter the economy, right? Through investments by ExxonMobil affiliates. You know, they're, of course, not all the spending literally enters Guyana, but ExxonMobil spending, some of that will be there. And most importantly would be the government spending from the Natural Resource Fund. The government, when it draws down funds to support the budget, which it must receive parliamentary approval, that will be a very direct way this money will hit the economy, okay? For the purpose of this presentation, I will not discuss indirect channels. I'd rather stick with the direct channel, but there are indirect ways but these monies will enter the economy. So these direct channels, whether when the government spends the Natural Resource Fund, or when Exxon or the oil companies, when they invest, these spending can have positive or negative effects on the economy and the entire society, okay? When the negatives are greater than the positives, we have this paradox in economics that's called the natural resource curse, right? The paradox of plenty, right? Where a bounty of monies can actually lead to adverse outcomes or positive outcomes, right? So let us move on to see the institutional mechanisms by which this money goes into the economy, and then at the end I'll discuss what are some consequences and possible management tools, right? So when the government draws or withdraws money from the Natural Resource Fund, those funds enter the consolidated fund, okay? All right. The oil funds do not directly enter the consolidated fund, only after government receives parliamentary approval. As I said, the monies are kept overseas, okay? And the consolidated fund, however, is a general account, and it receives all government revenues. It should receive all government revenues, in particular tax revenues, right? And this is not unique to Guyana. This is how all countries are set up. In America, this account, they have a similar account in the Treasury Department, which is linked to the Federal Reserve. In the UK, it's the same setup. Doesn't matter. Anywhere in the Caribbean, it's a very similar setup, okay? So, however, while the consolidated fund receives money, the government needs to make payments, right? It needs to pay contractors and all these things. and that is actually done through the Bank of Guyana account, okay? And you can say the BOG account, the government's account to the Bank of Guyana, the central bank, it is a subset of the consolidated fund, okay? And again, as I said, in the UK it's called the Ways and Means account. In the United States, this account, what I'm calling here the BOG account, is a Treasury General account, okay? And as a matter of fact, we should find a nice name for it in Guyana. I'm just calling it the BOG account. It's very confusing. This account is a liability to the Bank of Guyana, but it's a government asset. It's not an asset of the BOG. So from an accounting standpoint, it's really not BOG's money because it's on its liability side, okay? So that's why it should be given a name, all right? Now the consolidated fund, I've had data, it's been negative since 1985. Haven't had a data for the last 2 years, okay? Now the government's BOG account, however, what turned negative around, and I have several columns I've linked you to on this. The first year I think was 2015 when it turned negative, but the trend was there, it was going to be negative. And I know a lot of people have tried to make all kinds of political news on this. It really has to do with the fact that there was a debt ceiling limit, regardless of which government was in power. It was going to be negative, it doesn't matter. And for some reason, these guys were not able to increase the debt ceiling limit, which, as you know, there is also a debt limit in the US, and there's always a showdown in Congress over increasing this limit, right? So if you don't increase the ceiling, well then the government is left with spending out of its BOG account, right? So let's back up now. So the money enters the consolidated fund, and the government needs to use this money to pay contractors and pay all the people it's given things to, and whether it's grants or like the 20% of the budget. These checks are coming out from the BOG account, and they're entering into the economy. Okay. So we can turn. So let's try to understand now how the US dollar turns Guyana dollar, right? This occurs when the government increases the demand for Guyana dollar, right? Remember, for the money to get to the consolidated fund, it must be converted, okay? So the government is demanding Guyana dollar, and it's also supplying Guyana dollar, US dollar, sorry, right? So who will supply the Guyana dollar to the government, right? Well, there are two sources the Guyana dollar can come from. The central bank, the Bank of Guyana, right? Because as you know, the Bank of Guyana, or any central bank, has an unlimited check you can write, and it's a privilege, but it's a privilege that has been abused many parts of the world, okay? And you know how that story ends up. And secondly, the other source this Guyana dollar can come from could be the private sector. It is the government could sell US dollars to the private sector, and right, which enters the consolidated fund. Normally, what happens is the dollars from the natural resource funds are bought up by the Bank of Guyana. And interestingly, what you have then is the monies from the natural resource funds are basically moving from that account to the international reserve account of the central bank. Okay, that's basically what's happening. And the central bank creates the money for the government inside the Guyana economy. Okay? The implication of all of this, of course, is that it has led to a massive expansion of the money supply in Guyana right now. Massive. Right? If you look at the data, it's right, and and if the government does not continue to, if there's not something that's done to that supply of money, it can have consequences on the economy. Okay, let's go through some of those consequences of excess money supply in the economy. Well, you can have building and land speculation, right? That, Eventually the money will show up in real estate prices. I don't have to tell you, for those of you who have families in Guyana, that it's getting very costly to buy land and houses now, and it's only going to get worse, right? That's because a lot of money are entering this economy, right? It can lead to something that's technically called rentier capitalism. Basically, what you have are those with the means are going to build lots of apartment buildings and rent it to people, and home ownership will become more difficult, right? Okay. It could increase the price of non-tradable goods, right? Or non-tradable services, right? And non-tradable goods are typically not exported. So what are some of these examples of non-tradable services? Legal fees, education fees, health fees, insurance fees, banking fees, basic consumer services, such as entertainment, beauty services, going to the barber, all of these are non-tradable services. And when you have a lot of excess money, the prices of those services will really increase, all right? And we haven't even talked about food prices and so on yet, right? But I'm going to stay with non-tradable, okay? Right? It can increase the private demand for foreign assets, which we call capital flights, foreign currency hoarding, foreign property, foreign financial assets. Increase the importation of luxury items, auto, jewelry, expensive drinks, and others. I heard there are a few Lamborghinis in Guyana. I don't know which road they're going to drive that on, but good luck. So those are all possibilities, right? And of course, it could also increase the demand for unproductive assets as channels of savings, right? Saving. Cryptocurrencies, gold, diamonds, silver, right? Why am I calling it unproductive assets? Well, typically, once you hoard those things, it doesn't create businesses that lead to job creation. So, what are some possible solutions? Well, for starters, a lot has to be done in building institutions in Guyana. And I mean institutions that can be, I don't mean like a building, I mean systems that can help the government to manage the economy, and by managing the economy, you at least push back on these negative consequences, or transfer the negatives to positives, okay? So, the central bank needs an interest rate instrument. There is none. Okay, that it can use to stabilize the economy, right? And it uses a set of blunt instruments like reserve requirements and so on right now, but those can only, or moral suasion, which is an interesting word. It just means call the bankers in and you twist their hands on what you need, right? But generally, it needs an interest rate instrument. There is none, okay? And Guyana must not destroy its taxing capacity, right? I've been saying this for how many years? Since 2009, in our discussion back in the day when I used to be with the AFC in those early days. One of the worst things you can do is get rid of the VAT, right? We think the VAT is a very important tax for various reasons, right? Yeah. But if the VAT is high, what you need is some kind of system for, I use the term distributional justice, meaning that you must have a way to, the monies raised from the VAT, through the tax code, redistributed to people who really need it. For example, in the United States, there's something called the Earned Income Tax Credit, right? I know many of you accountants would know this, right? So, if you, as I mentioned, right now, 22% of the budget is financed by oil monies. If that goes up to 50, 60, we started moving hyperinflation territory, right? One of the most effective ways you drain money from the economy is through taxation. It is the most effective way, right? So destroy your taxing capacity means you're moving closer to basket case. And if you look at all the weak countries in this world, there's one thing that they all have in common. They have very weak taxing capacity, right? So through taxation, we can make the country fairer. I call it distributional justice, right? And so the VAT is a very useful tax. I'll give you one example why the VAT is a very useful tax. As you all know, Guyana has a very large underground economy, and I have done quite a few columns in that, which is not linked here, but the underground economy, the only way you can tax the underground economy is through consumption-based taxes, right? Through a VAT. Those guys are not going to declare their income, so they don't pay income tax, right? And if you're in the underground economy, guess what? You're more likely to buy, what's the name of the drink? All those expensive alcoholic beverages and so on. I'm not going to rattle them off, but or luxury cars and so on, right? But that is how you raise the money, right? If that is useful for that. Anyway, can we get this back the way so I can see my next? So taxation is very important, right? And of course, the Bank of Guyana should be creating securities, its own securities, which are called central bank securities, right? Did we skip something? Yeah, right? So, and these securities are useful, they're different from, but they're important as stabilizing tool. So much so that I actually published a paper on this last year with a colleague from Papua New Guinea, from the Central Bank of Papua New Guinea, because we did it for years, showed that the IMF been telling them to devalue your currency, and now we actually, the two of us, gave the central bank a tool to push back on the IMF, right? So this paper was published last year, and it's well, this now become very useful to the central bank over there, right? So that's another tool that we use. Let's move on. Of course, the treasury bills, which we all talk about, should be the purview of the central government. This should be coming from the Ministry of Finance, okay? Not your central bank. Of course, there needs to be many private avenues for savings, right? What I call pressure valves. As I said, if you have very few assets to save, or to put your money into, then you're going to put it in the few things you can get, gold, lands, and so on. So we've lost 30 years opportunity to modernize the stock market. All the privatization that took place from the Hoyt time, they missed this. Right? Things were sold out to one person or two persons. Those people, they should have been given, one of the conditions for privatization should be you have to go to the equity market eventually, right? Stock markets are very important for that because it brings transparency. So we've lost that, right? We don't even have, Dr. Bulkan might correct me here, but I don't know what else we have to sell, but all privatizations go forward. Equity market development should be an important source because it's a very useful way to distribute wealth to people, right? And we, Guyana, there's a whole debate right now on inequality and all of that. Well, if you really want to deal with it, equities are one way to do it, right? Right? If you want government contract, okay. Well, your company must go to the equity market eventually, and you have to guarantee that 50 or 60% of your shares are equitably distributed among the different groups, or if you say ethnic groups in Guyana. This is the way to do it, right? So stock market development is very important, and it helps to manage the economy, right? Of course, publicly traded firms, once you enter the stock market, then the opportunities for bond financing becomes easier, right? If you stay private, as a family-owned business, then you really can't bond finance. It's going to be very, if possible, at least in the US, somebody can correct me, I'm not aware of that. So one of the good things about having a wider portfolio of investable assets would be we can modernize the pension system. One of the problems with pensioners in Guyana is that they do not have enough assets to put their money, right? So you have a low rate of return in a high inflation environment. Right? So these are all possibilities. These are by no means the only ways we can do this, but I thought I should talk about these today. I hope you have a lot of questions. Thank you all for listening. You can link to many of these things.